So our mortgage went from $3,832 to around $7,200 a month.
When I bought my house, I felt very lied to after seeing what all the actual prices were.
People are going to lose their homes. They're going to lose their homes. I'm telling you guys, the storm is brewing.
So today we're going to be taking a look at some more homeowners. I have been seeing tons of videos recently of people showing their problems with their mortgage increasing, sometimes to absolutely insane amounts, the extra cost to upkeep a house they didn't think of before they purchased, some people trying to get out of their homes, go back to renting, just to find out the market they live in 2025 is not doing so well, so they can't sell. Other people are almost handcuffed to their homes because of the low interest rates they got during COVID, and of course more problems with HOAs, even if you don't live in one. I mean, we have a ton to look at. We also have some comments from you guys from previous videos, so if you want to be featured on a future video, leave in the comments down below. But let's just start off with the insane mortgage increases.
We purchased a home last December. It was a beautiful home. The price was higher, definitely higher than our first home, but it was something that was doable for us, and it was our dream home, and we thought that we were going to raise our children in this home, and we were going to have this home for a very long time. And the mortgage was $3,832, which might seem high for some, but for us it was fine. We could do that. So then in February, we received the new mortgage for the year that had like the escrow and all that, and it showed that we had an escrow shortage of $23,000 because whenever they had calculated the mortgage and the property taxes whenever we had purchased the home, they calculated it for the land. They didn't take into account that a home was going to be on the land. So whenever they realized, oh, there's a home on the land, then it gave us an escrow shortage of that $23,000. So our mortgage went from $3,832 to around $7,200 a month, $7,200 and change.
I would say a good amount of people would already think that the almost $4,000 a month is insane, but of course jumping that up to $7,200 because of escrow, I know it's not a permanent thing, but still, just getting hit with that in the mail out of nowhere, having to cough up more than double your mortgage instantly, or you're going to start having a ton of problems. I truly don't even know what I would do. As a realtor, your realtor should have advised you of this. End of story. I've told so many clients that this happens when we go and find something already built with lower taxes and no MUD. I'm sorry for you. Escrow shortages on new builds are common. $23,000 shortages are not. Your realtor and mortgage broker should have told you this. It's common knowledge in the industry, but the same way we talk about car salesmen, they want the commission check. They want the sale for these homes. So maybe some of these realtors won't be too ethical because they know if they inform you of a almost $25,000 shortage, you're probably not going to purchase that house. Then they won't get their commission check and won't make as much money. I make almost $200,000 a year. I'd be freaking out with a $7,200 a month mortgage. Don't buy a new build because of taxes. Could be a future mess. Buy less than you could afford. A lot easier said than done now. And buy a house you could sell without losing money. If it was really that easy, especially right now in 2025, then we probably wouldn't see clips like this all the time on social media. And we have a comment from one of you guys very similar. My mortgage went from $1,850 in 2013 to $3,200 in 2025. Never took money out and have a fixed 30-year mortgage. It's been property taxes and insurance. I mean, you're getting pretty close to almost doubling that mortgage just from that alone. But if you just want to take a look on social media, there are many posts like this. Homeowner proudly paying their $1,800 a month mortgage. Bank, it's actually $2,800 now. Your escrow was just kidding. When you find out your monthly mortgage payment increases from $2,200 to $3,200 due to an escrow shortage. Proudly paying the $2,400 a month mortgage. It's actually $3,000 now because of escrow. My mortgage went from $1,600 to $4,000. I thought my fixed rate meant my payments won't change. I could really just keep reading all of these off, but we could look at some of the comments. This has scared me into not buying, thanks. Taxes on a house should only be paid if it's sold or purchased, not assessed. I'm selling mine. I can't deal with it anymore. My mortgage increased $300 to insurance premiums going up. Life as a homeowner. This is my biggest fear right now. Just bought a house 3 weeks ago. Mine went from $2,600 to $3,200 a month just because insurance. You pay taxes when you buy the house, you pay taxes on it when you sell, and every year/month you pay taxes for just owning it. How many times do we have to pay tax on one thing? Another person saying something similar to the first clip. Nobody tells you about the escrow analysis each year, and we could see a little response to one of these clips.
This here is a joke, but many people experience an increase in their fixed rate mortgage payment, and they don't know why. Let's talk about it. Your monthly mortgage payment is made up of principal, interest, taxes, and insurance. And unless you pay those last two separately, both your property taxes and your homeowner's insurance are being paid off every month in a balance known as your escrow account. Your escrow account is responsible for the savings and payments of both of those items. When those rates go up, so does your mortgage payment. In this sense, you have a higher mortgage payment without your principal or interest changing at all, meaning your rate has not changed at all.
So that's why so many people are surprised when they get a fixed rate mortgage. They believe that that's the price they're going to pay for the next 15, 30 years, however long they got the loan. But if you don't know this kind of stuff, especially if you're a first-time home buyer, you could get blindsided just like the people we've already seen. This proves we never really own our homes. We just rent until we die. Pay insurance and taxes separately. Simple math. Pay off mortgage early by paying an extra $100 to $1,000 every month depending on your affordability. But if you are a first-time home buyer, the original creator responded, does not work with an FHA, which we're going to talk about a little bit later in the video. But we have another comment from one of you guys. My homeowner's insurance went from $1,200 in 2017 to $6,700 in 2025. It's climbed leaps and bounds, and this was me shopping around for the cheapest insurance. Almost sounds like they're possibly in Florida, with all the insurance just being laughable because of the storms. We've already talked about that previously, but this is exactly what you're going to see out of nowhere if your escrow increases.
Oh my god. Okay. Oh no. I got an email saying new escrow analysis available for my mortgage. I'm a little bit nervous, so let's open it up together. Escrow analysis. Let's see what it says. Projected minimum balance. We received a statement because your escrow account with us. We have safeguards in place to ensure that there is enough money in your account to cover your homeowner's insurance, real estate tax, if applicable. However, charges in your tax and insurance could result in shortage or surplus of your escrow account. Based on our recent analysis, you have a shortage of $1,200 in your escrow account. This shortage likely was caused by changes in your taxes or insurance. A shortage may also result if a full month escrow payment has not been made to your account. See these charges referred to part 2. Automatically spread the shortage amount over the 12 months for future escrow payments. This will reflect an increase to your monthly mortgage payment. Okay, great.
So hers, at least in comparison, is not that bad. $1,200, so an increase of $100 extra a month for the next year. But imagine getting that email and it says $12,000 or $23,000, and there's basically nothing you could do about it. Mine went up as well. The original creator responded $200 a month mortgage increase, so I guess she's doing it in the next 6 months instead of the next year. Get out of escrow. We put our money aside in a high yield savings account or 6-month CD to get several $100s covered with interest. Another person saying look into canceling your escrow, pay your own homeowner's insurance and taxes yourself. Banks mess up the escrow accounts every day. We have another comment from you guys. Homeownership under the right circumstances is a blessing. However, it can be very stressful too. There is no shame in waiting and making sure it's the right time for you. Because every time I make these types of videos, a lot of people will get angry saying renting is just throwing money into a fire. You're paying someone else's mortgage, all of that. And of course, I would like to be a homeowner someday, but sometimes it is better to wait it out, getting everything straight when it comes to the actual expenses, because it could end up being a lot more than you think.
When I bought my house, I felt very lied to after seeing what all the actual prices were. So here's a realistic what my house costs every single month. So I learned that when people say that their mortgage is less than rent, they only mean the mortgage, not everything else that comes with it. And for context, my house was about $200,000 at a 6.25 interest rate. I have a 30-year loan and I put 3% down. My monthly mortgage price is $1,134. My PMI for not putting down the full 20% is $72. My property taxes are about $245. My home insurance is $27.50. HOA fees are $280. My home warranty is $30.19, and then my utilities are usually somewhere around $250. And if you weren't keeping track, that was $2,030 every single month. So while I wouldn't do anything differently, I think a lot of people would if they had all the information. So don't let anyone push you into buying a house if you don't feel like you're ready.
So even though in comparison to a lot of the clips we're seeing and the national average when it comes to home prices, people would love to have expenses totaling $2,000, but from her initial $1,100 a month mortgage, she almost ended up doubling that because of all the other things she had to pay for owning that home. Those HOA fees are ridiculous. What do they spend on it? It's $3,000 a year. The total is still less than I'm paying in base rent. The problem is there are no homes in my area for less than $400,000. And we have another screenshot from TikTok here. Tell me how much your mortgage payment is and what state you live in. And the first one, $3,800 a month in California in 2023. Washington in 2019, $450,000. $2,200 a month mortgage with a 2.9% interest rate. I shall die in this home. And there are a good amount of people in similar situations, but at the same time, it is still like a handcuff. If for whatever reason you have to move, maybe possibly a job or family, whatever, you are not going to get that interest rate right now in 2025. So if you don't have an income to pay for the 6 or 7% interest rate on these mortgages, you're basically stuck where you are. Bought in August of 2024, purchase price is $450,000. The mortgage is $3,600 a month with a 6% interest rate. There's a lot. $2,600 a month, $3,000 a month, another $2,600 a month, $3,000 again, $2,500, $5,200 a month. I mean, some of these are absolutely insane, and it goes with a comment from you guys. Just because you have a fixed rate mortgage, like so many people in those comments did, does not mean your payment will not go up. It could definitely go up due to increase in homeowners insurance and property taxes. But now we have another bit of information just from a few months ago. What slice of the home market can you afford? This is from March of 2025, and you could just take a look if you want to pause. I mean, even when you're hitting the 6-figure mark, $339,000, in a lot of areas, especially if you're around some sort of city, is difficult to get. $150,000 for a $500,000 house. I mean, I didn't even look at the percentages. When we go to the $100,000 a year, you could only afford 37% of houses in the US. More than 60% of the homes in the entire country are unaffordable if you make $100,000 a year. Now, because of this, we're seeing a lot of people in the real estate world start trying to convince people to put lower and lower down payments, and then the banks are giving out loans for people who probably could not afford those houses, and is just really a recipe for disaster. I mean, we could see an example right here.
Whatever you do not put 20% down on a home without remembering this. You can put as little as 3% down. So here's what you do. Talk to a mortgage broker and ask if you qualify for a 3% down conventional loan. These programs are meant for middle-class families and have even better terms than a traditional conventional loan. Typically, you'll need a credit score of at least 640 and a stable job history to have a chance of qualifying. And if you do qualify, you'll be able to buy a home with less cash up front and have more savings for other expenses.
I feel like that's wishful thinking. A good amount of the time, the 3% down is all that person can afford, so you are barely surviving every month in a house that you most likely shouldn't have bought in the first place. I remember an older advertisement I saw from Rocket Mortgage, advertising putting 1, 2, or 3% down on a house now. Even worse of a situation than this clip, but we could look at a couple of the comments. But then you're stuck with a PMI until you get 20% equity. If you have the 20%, might as well put it down and avoid the extra expenses over time. Whatever you do, don't listen to this guy. You want to avoid PMI that could cost hundreds of dollars a month extra. Cool, I could have a $6,000 a month payment instead of a $4,500 a month payment. That's exactly what's going to happen if you do this. But we could go over to a highlight from a stream just showing how expensive these types of homes are becoming.
Guess the house price. This is in Tennessee. What are we thinking here? This is a modest 400.
$399.
Too low. Okay, next clue.
I'm going 420.
420?
Yeah.
I think it's gonna be too low. It's still too low. Let's just go 600 to see if it's too high or low.
I was gonna say 520.
520, okay. Too low again? Oh my god, these pictures are not helping.
How can it be higher than that?
Today's too low again, bro. This is,
I don't know what part of Tennessee this is.
I'm going 850.
How the fuck is this 850?
Too high. Okay, so it's between 620 and 850. Where's it at? This one. It's between 620 and 850.
790? Or is that too high?
742. 695.
So imagine putting 3% down on an almost $700,000 home. Again, I'm not trying to be mean, but if that's all you could put down, you cannot afford that home. Another comment from you guys: between this and the student loan situation, the recession is here. People are absolutely struggling. You could add in car payments as well. Even if you have it paid off, the insurance prices are through the roof. Add in the grocery prices, utilities. I mean, all of this stuff is just becoming way too much. But we could go back to the beginning of the video where a good amount of the escrow shortages are on new construction homes because they were built on an empty plot of land. And this is the type of quality you're going to get while also paying a ridiculous amount of money.
You did have a home inspection done?
Yeah,
Before you bought the house?
before we closed.
Okay, and how did you find that home inspector?
Through a realtor.
Through your real estate agent? Okay, cool. The crack at the master bathroom shower pan. And here's your leak. See, not in the other inspection. No. Majority of the homes will have an energy rating certificate either in the main electrical panel or at the garage. So you can see that I should expect to find an R value of 30 in the attic area. Right next to the attic scuttle, should be pretty easy to check the insulation thickness for the builder or any other home inspectors. I'll check this in the back in a minute, but looks like about maybe 6 inches of insulation. So we're about 2.3 inches of insulation material thin. Is that in your other inspection report?
No, I don't think so.
No. And at the main electrical panel, frayed and improper connections at the neutral wires inside the main electrical panel, overexposed conductors at the branch wire connections to the breakers.
And he just keeps going through the house, ripping it apart. This isn't somebody who waived the inspection and paid over asking in cash, but did use an inspector from the realtor, which definitely means there was some sort of kickback, helping each other out with business, and just kind of ran through the home, checking the boxes, saying that everything was okay. Sign at the dotted line, you purchased the home, here's my commission check, and I'll see you later. Sue the agent and inspector, you'll win, this is no problem. Well, there's your problem. It's a D.R. Horton house, a lot of the new construction builds. I believe anyone who signs off on houses with that much wrong should have their license taken away. And then he responds, it's a daily occurrence, unfortunately. I had a bad inspector. He missed so many serious things and never called or emailed me back myself, and my agent reached out as well. We go over to the next clip, very similar to one of the comments from you guys.
People are going to lose their homes. They're going to lose their homes. I'm telling you guys, the storm is brewing and it's coming fast. Insurance premiums and property taxes are skyrocketing through the roof, and the result is that people's mortgage payments are getting higher and higher to the point that's going to be unaffordable for most people. If you don't already know, your property insurance and your property taxes are rolled into your mortgage payment for as long as you have a mortgage. If you don't have a mortgage, you have to pay those property taxes and insurance separately outside of the mortgage. Part of your mortgage payment, when that statement comes in the mail, there's a line there that says escrow. And escrow is money that's set aside from your payments that is then used by the bank to pay your insurance and your property taxes. Your actual mortgage payment may not go up even if you have a low interest rate. Interest and principal will stay the same, but the amount you have to pay every month is going to skyrocket because the banks have to make sure you pay that. Your mortgage payment is going to go up because they've got to pay property taxes and insurance. This has always been the case, but the difference this time is that the rate of acceleration on property taxes and insurance is unlike anything anybody has ever seen.
Not me watching after I just bought my home today. The government owns our homes through property taxes. We're not supposed to own property. We're supposed to eat, sleep, and work. Enjoying life is not part of the deal. This is a lot more depressing of a comment section. Not only that, auto insurance is getting out of hand. That's what I said earlier too. And we have another one of the trends. Tell me your mortgage payment in the year you bought your house. I'll go first. 2025 and almost $3,000 a month. 2024 and $4,000 a month. 5.5% interest rate, not including HOA. But I also live in Hawaii, probably one of the most expensive states to live in. End of 2023, Orange County, $4,800 a month plus HOA, and it's not a mansion. Regular home in a regular city. 2025 this month, $3,600 a month. 2023, $2,800 a month. But talking a little bit about the HOA, I just had to put it in this video because I almost hoped that this is satire and it just went right over my head. This isn't serious at all because I made a dedicated video recently talking about how terrible HOAs are, but this takes it to an entire new level.
Well, it's been a few days, but it looks like we got another one. Dear non-HOA member, Mr. Briggs, it has come to our attention that although your property lies just outside of the official boundaries of our homeowners association, you are nevertheless benefiting from our contracted street sweeping service. As you may have noticed, and we're most certain you have, our streets are maintained on a weekly schedule paid for exclusively with the dues from the HOA community members. While your property does not fall under our jurisdictions, your home is adjacent to our HOA property, resulting in unearned aesthetic benefits and debris reduction at no cost to you. Well, it don't hurt me any. Please understand this is not a free service. Maybe for y'all, but apparently for me it is. Our members pay extra annual fees to ensure a clean and uniform appearance throughout the neighborhood, and it undermines our collective effort when non-members passively enjoy these benefits without financial contribution or acknowledgement. We demand the following. 1. Do not park on or near in front of your house, especially during sweep days every Monday and Thursday. 2. We require you to donate to our street maintenance fund. We require a $75 monthly payment plus an extra $25 inconvenience fee for being a non-community member. A total of $100 a month to offset the indirect usage. Yeah, I'm not paying any of that.
So not only are these HOAs nightmares to the people that live in them, but if you're out of their jurisdiction and reap the benefits of just being near the house in the community, they're going to start harassing you and demanding money, putting notes on your door telling you that you're not allowed to park in front of your own home, as if this is just something that's okay to do. Again, I hope that this is a joke, it's not serious, because the amount of nerve to even think about doing this is just unbelievable to me. Dear HOA, please stop sweeping in front of my house. Thanks. Problem solved. You should get a lawyer and send the HOA a cease and desist letter. That way, if they ignore it and continue, you could sue for damages, because it sounded like this wasn't the first note that he got. For me, it's the 25% inconvenience fee because you're not an HOA member. I mean, where is this coming from? They're just making stuff up. So with all the problems we've seen so far, there are a lot of videos like this of people regretting owning homes.
Are there people out there that have gone from owning a home back to like renting a home or an apartment? And why did you do it? Was it for the convenience or for the money saving or for both? Because lately I've been thinking that that would just be way easier. And everyone says that owning is better, owning is better. It's a lot of work. Keeping up the outside of a house and the inside is a lot of work. And we pay like double what we would pay renting to own a house. And I'm like, I feel like it would just be smarter to go back to an apartment and not have a gym and a pool, and I wouldn't have to take care of anything. And that just sounds like a better deal right now, especially with like how expensive everything is in the world. Has anybody done this? Is this a thing?
So this type of problem has definitely accelerated over the past year or so, with still very high home prices. Maybe some markets are finally cooling down, but still, overall, I think the average home price now in the US is almost $430,000. And there are a lot of people who regret recently.
How are all my friends who bought houses in 2022 and you thought, you know, the payment would get lower soon because interest rates would go down, you could refinance, but the interest rates just kept going up and you couldn't refinance and you've just been house poor for 3 years. Can't afford vacations, can't afford the simple luxuries of life. How are your ramen noodles for dinner tonight? Literally, that's what we ate for dinner. I mean, I added some like ground turkey in there, but damn, like we are at our breaking point with being house poor. But the thing is, we could not sell our house even if we wanted to for a variety of reasons. But mainly, houses in our neighborhood are not selling. Yeah, there have been houses on the market for almost a year in our neighborhood, so.
Some of the comments, we got tired of waiting, so we're closing next week. $3,300 a month for a $515,000 house, locked in at 7% interest, and buying it down to a little bit under 6. Don't ask how much it's costing us to buy it down that much. The original commenter responded they had a $550,000 house, and they live in a metro, which adds another $400 a month, so their mortgage is $3,400 a month. I mean, we could take a look right here with the clip up on screen. June monthly mortgage check-in. Mortgage payment was $3,428, and only $1,100 is going to the principal. $2,300 evaporates because of the interest, and they still have $445,293 to go. So yeah, we do have people selling their homes and going back to renting.
I honestly wish somebody would have told me how overrated it is to own a home. My fiance and I just sold our house. We are back to renting. I'm ecstatic. He's ecstatic. We are saving so much. We were really young and stupid when we bought our house, so I'll give you that. But the weight that has been lifted off of our shoulders is, I can't explain it. There is so much maintenance that comes with the house, and our mortgage was ridiculously expensive. I can't even say the number because I'm embarrassed. We are probably not going to buy again for a very long time, or at least until we find our forever home. Just a PSA, if you're not ready for the maintenance and the cost that it comes to own a house, don't do it. Take your time. Please take your time, find a good realtor.
So we could finish off this video with some of the markets around the country cooling off. Of course, that sounds good overall. However, when you really start looking at the numbers, some of these homes' values have doubled within a couple of years, making it barely affordable or completely out of reach for so many. So even when we see a little bit of the cool down, 10, maybe even 20% lower than their all-time highs, that's still incredibly expensive most of the time. And I also said some areas, not all, because there are specific cities that are still just going up in price.
Nashville is absolutely crushing it right now. They might be one of the best real estate markets out there. Now, you've heard me break down cities like Houston, Naples, Miami, Dallas that have ridiculously high months of inventory, but Nashville is a completely different story. Right now, there are over 4,700 homes for sale in Nashville, and Redfin reports around 919 sell every month, which is just 5.1 months of inventory. A perfectly balanced market. This is right where you want to be leading up to summer.
Which makes it incredibly difficult to negotiate with sellers and will overall be very, very expensive. So that's all I got for you guys today. Let me know what you guys think in the comments down below. YouTube thinks you'll like this video popping up on screen right now, but hopefully you guys enjoyed this video. If you did, please leave a like, and I'll talk to you guys later.